Hello, welcome to Business Incorporated, live from Channels HQ right here in Lagos. Here's what's coming up in the next 55 minutes. This PMI index improves in December 2023. We get a sense of support to expect for MSMEs in Nigeria in 2024. Kenya-US trade negotiations will resume next month in Nairobi after discussions scheduled for December failed to kick off. And Bitcoin falls below $43,000, triggering sharp rise in liquidations. It's great to have you join us. I'm Ladi Williams. Let's get a sense of how major markets are trading today and stories that set your agenda. We're seeing upswing for oil prices today, building on significant gains from yesterday's trading session. The surge was driven by concerns over disruptions in Middle Eastern supply, particularly due to issues at a Libyan field and escalating tensions related to the Israel-Gaza conflict. In early trade, Brent crude climbed by 33 cents, marking a 0.42% increase to reach $78.58 per barrel. Simultaneously, U.S. WTI crude futures, that saw a rise of 40 cents, about 0.55%, bringing the price to $73.10 a barrel. Both benchmark prices displayed noteworthy 3% upticks on yesterday's trade, settling higher for the first time in the last 5 days. This positive momentum, especially evident in West Texas Intermediate, marked the most substantial daily percentage gain since mid-November. We'll drill down on what to expect in the oil market later on the show. Well, the Central Bank of Nigeria has announced that cash withdrawals will not be allowed from accounts created for virtual and digital asset transactions such as cryptocurrencies. The financial market regulator made this known its latest guidelines on operations of bank accounts for virtual assets service providers. According to the Apex Bank, withdrawals from these accounts would only be available by transfer or manager's check, while no third-party check shall be cleared from the account. The CBN explains that an account formed under its new only be used for virtual or digital transactions and will not be used for any other reason. The Nigeria Employers Consultative Association, NECA, has warned that the country's economy could remain bleak in the next 6 months of 2024 if there's no significant growth across its key sectors. Director General Adewale Smart, who made this known to journalists, attributed the bleak outlook impact of petrol subsidy, harmonization of the foreign exchange market by the Tinubu administration, which made 2023 most challenging for businesses. However, the umbrella for employers in the country showed that the economy would be signs of growth afterwards if positive policies are implemented. And the Speaker of the House of Representatives, Honorable Abbas Tajuddin, has inaugurated the University of Lagos 484-bed international students hostel and 4 other projects initiated by the Chief of Staff to the President, Femi Gbajabiamila. Speaking at the event, the Speaker of the House of Representatives says legislative representation and constituency projects are 2 critical components of a functioning democracy, especially in a representative system of government like Nigeria's presidential democracy. Honorable Tajuddin also says all the projects facilitated by the former speaker will help address the needs of the people and improve the status of the constituencies. Take a listen.
It's day 2 of project's inauguration, facilitated by the Chief of Staff to the President, Femi Gbajabiamila, and Speaker of the House of Representatives, Tajuddin Abbas, in Lagos, to unveil the infrastructure edifice provided for the people. One of such facilities is the International Student Hostel constructed for the University of Lagos to help address accommodation issues.
With a student population of over 60,000 and current bed spaces less than 10,000, we are especially adversely impacted. And this has adversely impacted our student experience and our ability to expand globally and attract international students to the university.
The former Speaker of the House of Representatives goes down memory lane, highlighting his university days in the same institution.
My story also began here at this university. On this campus, I made friends who continue to play important roles in my life. I learned and acquired that education that allowed me to become a lawyer here at home and abroad. On this campus, I went from being a young man with ambitions to a young man with a plan. I remain very fond of and incredibly proud of this great institution. This 484-bed hall of residence we have gathered here today to commission and to dedicate to the benefit of this institution and the generations that will continue to pass through this campus adds to that long tapestry of joint and continued effort that has sustained this great institution, and at the same time honors the work of the visionaries who came before.
And for the current speaker, Honorable Femi Gbajabiamila is a leader that has served the people passionately for over 20 years.
He's a rare person. I'm sure there may not be too many people like him in this generation, but it is our prayer that the future should emulate the good examples he set while in the National Assembly and to do better.
The National Open University Surulere campus is the next project handed over for easy access to learning. And the next stop is the newly constructed Bode Thomas Police Station. That's not all. A mini stadium is also provided for the people at Orile Kokaguda LCDA, Surulere.
I want to thank every single member of this constituency, from the ESCO to the citizens of Surulere too, for the support you have given me. Out of this stadium, many stars shall evolve.
The reconstructed Randall Avenue, also in Surulere, is the final project handed over to the people.
Well, to our first conversation now, there have been reports that oil marketers in Nigeria say PMS is supposed to or should sell at about 1,200 naira per litre. And at this time, Nigerians are still struggling with the current price right now. Let's get a sense of what to expect for energy prices in Nigeria. Joining us now is Mr. Bismarck Orane, CEO, Financial Derivatives Company. Joining us via Zoom. Great to have you on the show, sir.
Good afternoon, and happy to be here.
So we're seeing speculations that Nigerians might have to pay 1,200 naira per litre for PMS. But we'll see the NNPC has come out to assure us it will not happen. But from where you're sitting, do you see 1,200 naira per litre coming?
No, that's not possible, because at 1,200 naira per litre, it's actually, petrol price in Nigeria will be more expensive than all the neighboring countries. And in that case, there'll be smuggling of petrol into Nigeria rather than out of Nigeria. So I think people are mistaken where a spot from a range or a trend. What I think I understand is that petrol could range from 600 to as high as 1,200, depending on what goes into the template. I think there's a misunderstanding of concepts here. And so I would ignore that. At 1,200 naira per litre, the distortionary effect to the allocation of resources and prices and the knock-on effect on other prices will be so significant that it will to bring the economy to its knees. So I don't think it's realistic to even consider that at this point in time.
Yeah, because definitely, I definitely don't want to consider that price, because I know how the current price, impacts me personally. But let's just say it happens. Do you think Nigerians can take this price?
No,
the average consumer?
Let me be clear. it was 198 naira a year ago. Okay? If it goes to 1,200, it means it has gone up by a factor of 10 times. In other words, it's gone up by 1,000%. It's not possible. Your salaries are still the same, prices are still the same. So it's not. I think people should stop speculating or hallucinating, if I may use the word. It's not going to happen. The average price across the country across 900 naira, maximum 1,000 naira. That's and that includes taxes. So if you're just talking about the price itself, the effective cost, it is nowhere in that range. So I don't think it will happen. And what we must try to avoid is a self-fulfilling prophecy. If you say it more times than not, then people begin to believe it, and then people begin to speculate on it, and then it begins to drive a price. It's like when you go to a gas station, you see 5 cars, and say the next petrol station you see 6 cars. Then you call somebody, I think there's a petrol shortage. Everybody comes out of the houses, and then there'll be a petrol shortage. So I think that, to be honest with you, it's not realistic and it's not likely to happen.
So I guess to avoid the fulfillment of this prophecy, I'm not going to say that number again going forward. But we have a couple of refineries at this point. Potaka Refinery, Dangote Refinery, most of them are supposed to be on stream at this point. What are you seeing this year? When do you think Nigerians can start using PMS coming from these refineries this year? And how will it impact prices?
You see it in January. Dangote has received its, I think it's 4th or 5th cargo. So it's now, you cannot produce with only one cargo. You need a base stock. So I would say the base stock will normally be about 5 to 6 cargoes, which is actually almost $800 million or almost $1 billion. So I want you to imagine that Dangote invests about $19-20 billion in the refinery complex, and it's having to carry inventory of about $1 billion every month. Can you imagine how tasking that could be on an investor? So Nigerians have to be happy that we had an investor like Dangote refinery, which has been able to commit this kind of resources and take this kind of risk in an environment which is considered to be more risky than normal. So I think that's, and the truth is that it will guarantee you quantity, it will guarantee you quality, but what it cannot guarantee you is price, because the price of oil and oil-related products, refined products, is determined by the global price of oil. So it's not in the hands of Nigeria. We're not a price leader. It's not in the hands of Dangote. It's more in the hands of Saudi Arabia, Russia, and the United States, the big players.
Now, talking about the big players, I know very soon we'll be hearing from OPEC Plus, but looking at the global oil market at this time, we're seeing some strength with prices. Prices are on the rise again. Do you think the oil bulls are back, for 2024?
No, I think what is happening here is, you see, there's geopolitical tension. Israel, somebody was assassinated in Lebanon, and the Lebanese Hezbollah, which is the party of God, they call them, are in alliance with the Hamas, and therefore it is escalating. It's escalating the tension in that area. So the U.S. Secretary of State has gone to the area to try and de-escalate it. Netanyahu is playing brinkmanship. He wants, the more it escalates, the better for him, because his political career seems over. So I think that will de-escalate. Once that happens, the price of oil is bound to start coming down. In any case, it's at this point in time, it's almost equal to or slightly lower than our benchmark price. So it doesn't offer us much comfort, but it means that our oil quota is at now 1.5, while our budget was based on 1.7. And now the price was also based on 77. The current price is around 78. So we don't have much room to wriggle as a country for our fiscal obligation. So this is crunch time for countries like Nigeria, who on one hand export oil, on the other hand refine oil in other parts of the world, and we have a very import-dependent economy. So that brings you to the main issues that we are dealing with today. I'd like to talk a little bit about what we noticed when we went to the markets yesterday. We noticed a fall in certain commodity prices. Gari in particular went down by 13% to 20,000 naira. Tomatoes went down by 20% as well. And onions went down by as much as 39%. And beans stayed flat. That's what we're seeing. The question is, why are the prices dropping and right flat at 70,000? Why are these declining after the month of December? So we try to analyze what happened to prices in January. And if you look at the monthly food inflation for January, all the way from 2020 to date, we've seen a decline. In 2021, the food inflation, monthly food inflation from 2.05 to 1.8. In 2022, went from 2.19 to 1 point, very sharp drop. 2023, we saw an increase from 1 to 2.08. Ask yourself, why the price of food in January 2023, why did it increase? It increased principally because of one thing, the Naira redesign program. We had an election coming and everything everywhere was turbulent. But if you go back and ask, why do price of foodstuff decline in January? Why? One, you spent all your money buying things for Christmas. Two, you have school fees to pay in January. So we call the school fees effect and the post-Christmas blues. That is what is responsible. So we have seen this happen now, and quite frankly, and that was only yesterday we went to the market. I can assure you that before the end of the month, the prices will decline further. Because people have no cash, there's no money in the pocket, and there's a lot of right now. So that is what we are seeing right now, Ladi.
Right, and definitely we hope prices continue to trend downward, in 2024. Hopefully, if we play our cards right, as you said, in the previous interview, that we have to do some heavy lifting, in the first half to get a soft landing at some point. Thank you so much. It's always great having you, Mr. Bismarck Rouani, CEO of Financial Derivatives Company. Thank you so much.
Thank you for having me.
All right, we'll take a break now. When we come back, we'll get a sense of what to look out for MSME support in 2024. That's in a moment. Just stay with us. Welcome back. Well, Nigeria has about 36.9 million micro and small, medium enterprises, representing a big number there, about 96.7% of the nation's total businesses. Notably, 67% of these enterprises are owned by the youths. But with macro headwinds from 2023, like rising inflation, currency devaluation, it's made the business environment quite harsh for these MSMEs. We see the PMI, though, improved in December, about 52.7 points from 40 points in November. So it shows an improvement there for December. Let's get a sense of support expectations for MSMEs in Nigeria. We have joining us Timtola Adekunle Johnson, Senior Special Assistant to the President on MSMEs and job creation. Great to have you on the show. Happy New Year.
Thank you. Thank you. Good afternoon.
Yeah. Happy New Year. Happy New Year. So as I said before, 2023 was quite the year for businesses in Nigeria. Talk to us about, some of the support, given to MSMEs in 2023 by the federal government. And I remember in our end of year broadcast, you did talk about making available, the government making available single-digit loans for MSMEs in Nigeria. But looking at the stance, from the Apex Bank in Nigeria, it's still quite hawkish. Even though we see in other climes, there are signs of rate cuts, coming. But here we still have really high inflation. So talk to us about how possible it is to get this single-digit interest rates, and how much is it going to cost us as a country?
All right, thank you, Ladi. So what the government is trying to do is we have identified that, you see, whilst the government has made arrangements for palliatives or interventions, but you see, there's nowhere in the world where SMEs or small businesses continuously live or run their businesses solely based on palliatives or interventions. They are called interventions or palliatives because they are not an everyday thing. So what we're trying to do is to ensure that there's a conducive environment. As a business owner, would you rather collect a palliative every 3 months, or you want to have an avenue where you can walk into any commercial bank or government's financial institution and secure a loan of whatever it is that you're looking for at a single-digit sustainable rate and at a good tenure, instead of looking at 6 months, you're looking at 3 to 5 years, with a possible extension to as much as 10 years. So what we are trying to do is to ensure that whilst there are arrangements for palliatives, the palliatives are as a result of the removal of the subsidy. So Mr. President has made provision for some palliatives for small businesses, manufacturers, and all and etc. But what we are saying is that once that is being put in place, SMEs should be able to walk into banks and access loans like any small business anywhere in the world. Access loans at reasonable rates, not at 24%, not at 30%, not at 20-something%. There should be an avenue where an SME can walk into a bank and get a loan, well, as low as 9% for now. There is a partnership for them to do that right now. And one of the federal government support banks, the Bank of Industry, has said that they are going to use their own funding to on-lend to SMEs at 9%. So if you are qualified and you meet all the criteria that they are looking for, you can get that loan. Now, they are starting with 75 billion. It does not mean that if the loan performs, it cannot be reviewed upward. And the same thing with Access Bank. Access Bank has said, we cannot do single digits just yet, but we can come down from the way above 20-something%, very close to 30%, and do a fixed interest rate of 15%. And we are going to start with our own money, 50 billion naira of our money. If we watch how the performance of the fund is, we can scale up to as much as 100, 200 billion if possible. But we have to look at all variables to see that the funds are performing. Right. Because you can't just go into a market and, for instance, say you want to start with 1 trillion naira and the fund does not perform. So it is always best you test the waters, see those, because you put out as much funds out there and SMEs do not access these funds. So that's not good for the banks as well. So once these funds perform, and we are very sure these funds are going to perform because there are a lot of creative-minded SMEs that have been waiting for this opportunity. But what we want to do, and what's most important, is that we do not want it to be 1 or 2 banks. We want it to be a way of life in this country.
All right, but at the end of the day, trying to get the banks, involved in this, that would require the central bank, also weighing in, because at the end of the day, we're seeing the MPC, raising rates on one hand, trying to mop up, excess liquidity, trying to tame inflation, at this point. But this fund, for most of these MSMEs, is it going to be the kind of fund that they can easily have access to? Not the type you hear about that, oh, okay, fine, the government has provided this fund, but you now hear that some of these people could not even get it, some of these MSMEs. And at the same time, how do we make it, how is the synergy like to make sure that the CBN is also, brought into this, to make sure that even though they're trying to, tame inflation, we're not spiking inflation again by lowering rates somewhere?
Okay, thank you, Ladi. So CBN as a regulator has not restricted any bank, be it commercial or federal government financial institution, from giving out single-digit loans. These are loans, these are funds from these banks. For instance, let's take the case of Access Bank. So I want to collect a loan now from Access Bank, I go to a place, I go to a branch in Enugu, for instance, and I tell them I need a loan for my business, either as a startup or as an expanding business. And put in my application, they verify whatever it is that they need to verify. And the banks are very comfortable with whatever it is that I bring. I collect my money and capiche, that is it, so be it. That's between me as the MSME and the bank. So basically, that is what, it is not something that is restricted. It is not restricted in any way. It is something that anyone can wake up into the bank and go into the bank and collect. Now, you either qualify or you do not qualify. So if you are looking for, say for instance, you want to collect 20 million naira, and the banks see that you do not have you do not have the track record to return the 20 million, they might want to advise you that why don't you start with the 10? And so it is not something that is going to be difficult at all. There are no red tapes all over the place. It is going to be as simple as it is done anyway.
How's the government looking to track, you know, the whole process to make sure that there are no red tapes? You know, what kind of data are you going to be collecting, you know, to make sure that the right people actually get access to these single-digit loans?
So this is very, very important, because what you've just said now is extremely important, because we need to know as a nation that what we're doing, we're tracking. So there will be a quarterly report. This report will be made public, you know, who has collected what, at what rates, and from what cluster. You know, this report will be made public, basically. So this report will even inform at the end of the year whether it is good for these banks to review these loans upward, or decide that, listen, these loans are not performing or not. So there must be a sort of M&A, you know, and there's a mechanism in place to ensure that there is a public awareness of these loans. It is going to be common knowledge. It's going to be open to everyone, basically. This is as regards the loan. And let me just quickly chip in that next week, Tuesday, His Excellency Mr. Vice President will be representing Mr. President at the now expanded National MSME clinics. These are, you recall that the clinics were held under the last government. Now, they've been reviewed by the current government, and Mr. Vice President will be representing the President in Benue State on the 9th, Tuesday. Now, we are now going to have a situation where investors come along for these clinics. They look at creative Nigerian businesses and business owners, and we encourage investors to buy into stocks in those businesses. For instance, I might be exhibiting made in Nigerian shoes, and you, laddie, you are an investor. You come in and you see my shoes and you like what I'm doing. You might decide that, you know what, why don't I offer you X amount for 20% stake? You know, we are trying to encourage something like this. And also, you know, people raise the issue of what if the investors want to take advantage of the businesses, because that is also possible. So we are ensuring that we are going with the right legal advice team that will sit down with the SMEs, you know, if such opportunities arise, to let them know that, listen, okay, so that they know the total portfolio of whatever it is that is their business, and know what it is that they can what it is that they can give out in terms of stock and not give out. So we will try to ensure that whilst we are trying to give these SMEs, open these opportunities to them, we also do not want them being taken advantage of. No, so for 2024, we are deliberate in ensuring that running business in Nigeria is more seamless. You know, if you recall that the special advisor on ease of doing business, Dr. Jumoke Oduwole, who was an advisor under the last government, is also back. And that's because Mr. President has realized and he understands the enormity of this space, and he wants to ensure that businesses are run seamlessly.
Right. And
now,
I guess for us
is doing, you are now.
Yeah, I guess for us to actually see that, happen in 2024, I guess at some point, there'll be at least stable power supply, because at the end of the day, if there's no power supply, I don't know how, businesses are going to thrive and be able to afford energy. We're seeing forecasts of energy prices in Nigeria. We're already seeing talks about the business environment, getting more tougher, in 2024. But I guess for us to see this happen, we need to start seeing the little signs, like constant power at least. Right. So definitely we're hoping for that. Thank you so much for coming on. Mr. Timitola Adekunle Johnson, Senior Special Assistant to the President on MSMEs and Job Creation. Thank you for coming on.
Thank you, Ladi, for having me.
All right, so it's another trading day right here, and definitely we know the market's already beaming with excitement right now, even though we see some big pullbacks in some markets. We have Willie Bong with the details there for the markets. Great to have you, Will.
Yes, good to have you. See you here, Ladi, for another trading day, because it's ongoing right now.
Yep.
The market is definitely on a big roll. The market hit 77,000 yesterday for the equities market. That's the NGX I'm speaking of, because I'm always talking about broader markets.
The NGX just
But we're
keeps
talking
going.
about the domestic equities market, which is very exciting to know that it is really moving on a very, we don't even know how to describe it. It's
Right.
really on fire. It's like liquid fire moving on, and we don't even know what.
It just keeps going. I wonder where the top is at this point.
Well, we're just going to go kick off with market sentiments for major key equities in Africa, where it was trading with mostly positive sentiments. The NGX was trading up at intraday 0.49%. It quickly, very swiftly, as I was speaking earlier, hit the 77,000 points yesterday, and it may very well cross 78,000 at the close of the bell. Now, South Africa's JSE is up also at intraday, more than 0.5%. It was trading with negative sentiments for 2 days now. This rebound is very much needed. Now, elsewhere, let's see how the EGX30 is trading at intraday. It traded with negative sentiments, 0.13%, down the red, still at 25,000 level, but we're hoping that there's a rebound anytime soon. The market will definitely be closing for the week today, so we'll see how Monday plays out for investors. Now let's see the Nairobi Securities Exchange. It closed Wednesday's session in the green, a relief for that index after kicking off the year in not so positive territory. But we're also going to be getting a sense of what's happening inside and look into the Securities Exchange and see what's driving sentiments there with investors and seeing what's going to be happening there. We're going to be joined by Wachira, is the Chief Executive. We're going to be joined by Wachira Kariuki, is the Head Training and Research Windsor Brokers. Good afternoon. It's good to have you on the program.
Fantastic. Thank you for having me, Channels TV. It's always a pleasure from Nairobi, Kenya.
Okay, so now we see that the Nairobi Securities Exchange has been trading. It's coming off 2023 bearish, just closed the year down, last year 27.5% lower. With this persistent drop in the index, is this still linked to the exit of foreign investors? We do know that over 6,000 foreign investors fled the exchange at the end of September last year.
Right. Yes and no. Foreign exchange will always influence the flight of money from capital markets in Kenya. But that being said, the two other additional changes that maybe are affecting the stock exchange is that there has been a significant increase in the interest rates in the country. That means debt is a bit more expensive. But what happens is that there's a commensurate fixed deposit amounts, the interest on fixed deposits has increased, which means it's now much safer and more comfortable for investors to liquidate their shares and park the money in fixed deposit. You can now get upwards of 11-12% in fixed deposits in Kenya, which was previously, which is unprecedented. And so that's a pretty good way to park your money. Number two, is that with the increase in interest rates, government bonds have also become quite an interesting way to park your money. And remember, bonds and shares generally compete, and therefore if you're liquidating one, you're probably getting into another. All right, and so there's a bit of that. So there's new and more competitive alternative investments which are competing with the stock exchange, and that's why there's a significant bear run. Although as we get into March, we think we're going to start seeing an increase and maybe an upsurge in prices, hopefully, as dividend season kicks in. March is the first quarter, and that's when the first dividends are paid out for most shares in the stock exchange, especially the tier one, the top corporates. That's when they start giving out, and of course everyone wants to participate in a dividend, and most people start buying shares then. That's my rationale and my quick analysis of the stock exchange right now in Nairobi.
That's very fantastic to know. We know that there are different asset classes where investors can actually get some form of return amid the rising interest rates in the country. But we also see news coming up from the country that the exchange has also, extended the suspension in trading of the Kenya Airways, shares in Kenya Airways for another 12 months. Effective tomorrow, that's January the 5th. Is there any impact this is having on investor confidence at the moment?
Not really. Kenya Airways shares have been suspended for 4 years now. They were suspended on July 23rd, 2020. All right, and that was to enable the company restructure their debt, restructure their management, restructure their airlines, restructure their loan agreements, restructure their contracts, and this has taken a bit longer than expected. Initially, when this was happening, when they went to seek for approval for that suspension, they only sought for approval for 3 months, 90 days. It has extended to now 4 years because it's taking a bit longer. So that's what is called a one-off. It's not a normal case. So Kenya Airways has been suspended, which is actually a good thing, because if the other shares are declining, you can imagine how much more Kenya Airways would have declined had they not been suspended. So that freeze is actually a good thing. Let them restructure. The CEO, Kilavuki, has been quoted severally, saying that the company is going to come back into profitability. And we know last year, for the first time, they actually broke even and actually made some money. So we are hoping by the time the suspension is lifted, it will not be suspended, then a drop. It will be suspended, then an increase, hopefully, as it continues to have a bull run, even as other shares hopefully continuously also rise. So the time it's opened will also matter very critically. So let them remain suspended. So far, so good. The company is a bit more structured now. There are more contracts. The government has put in some money. They're a bit more restructured regarding their capital financing, their debt. Their balance sheet is a bit more solid, having looked at it. And I think all in all, I think it was a good idea to suspend the company until it's in good shape. So no, it's not affecting the rest of the market. The rest of the market is being affected by fundamental issues, right? Context issues, the depreciating shilling, we've hit 154, the issue of government debt, all right, and of course the issue of capital flight by Americans and people who hold their investments in dollars. So that's just what it is. Kenya is just not necessarily the one dragging the market down. It's other fundamental issues and economic issues driving the general stock exchange in a steep decline until maybe February, March, when the first we expect maybe a small tick upwards as we go into the second quarter of the year. That's my analysis.
Thank you so much, Wachira Kariuki, Head Training and Research at Windsor Brokers, for breaking that down for us. Thank you so much.
Right. Fantastic. Thank you. Always a pleasure. Thank you.
So let's look at the Middle East markets now, where major equities were trading mostly positive at intraday. We see the Abu Dhabi down only at 0.51%, 9,665 points. Dubai, on the other hand, up 0.23%. Let's see how Saudi and Qatari indexes performed. They were in the green at intraday, 1.44% up. Qatari also up 0.47%. Now let's see how Asia markets traded today. The China led losses in that region today, following Japan stocks, followed by Japan stocks, which resumed trading today after an extended New Year's holiday, during which the country witnessed an earthquake and also an accident involving Japan Airlines. Now, Japan's benchmark Nikkei was down first trading day of the year, 0.53% down. It kicked off in the red. China Shanghai was also down 0.43%. We see the HSI, that's Shanghai, down 0.43%. Australia is also down 0.39%. We see major stocks in that region all in the red today, and this is from taking cues from global stocks after the minutes of the U.S. Federal Reserve showed that interest rate cuts may likely be what decision they're going to take. So there's little or no clarity on when that might happen, if they're going to increase interest rates or cut, hike them now. So we're seeing that happening for Asia markets. Now let's look at the US markets. It's also in the red. The Dow futures, S&P futures, and NASDAQ futures also down at intraday, 0.76% for the Dow Jones, S&P 500 0.8%, and NASDAQ 1.18%. So Ladi, we've seen Microsoft also trying to introduce AI Copilot in our Microsoft for our keyboard. So I think we should be excited about that.
That'll be quite interesting to see. I wonder what the AI is going to be doing there. But thank you so much, Will, for the details. All right, now let's get a check on what's happening in London now. We see a think tank, High Pay Centre, have come up with another campaign for fair pay, in the UK. Let's get a check now on how that's going to happen. Juliana joins us from our London studio. Great to have you, Julian. So we see the study showing that FTSE 100 chiefs, that's the bosses of Britain's largest companies, were paid more in 3 days than the average UK worker in the whole year. Tell us about this.
Yeah, that's absolutely right, Laddie. We're just 4 days into the new year. And as you said, this think tank, the High Pay Centre, they always do it at this time of the year, just to remind us of the kind of harshness of economic disparities. I say harshness, I suppose it depends. If you're sitting at the top of the FTSE 100, then I presume it's no headache for you. But certainly for beleaguered households and employees in the UK, some of this data will be quite shocking because what they have said is that by 1 p.m. today, so pretty much about now, these bosses at the FTSE 100 or UK blue chip index firms would have earned more than what the average UK worker would have earned in a year, which is absolutely shocking. I think the average salary, if you are a FTSE 100 boss, is probably about £3.8 million annually. This excludes bonuses, by the way. And I think somebody's managed to calculate that to being over £1,000 an hour, which, depending on which market you're taking your naira from, is about 1.5 million naira per hour, Laddie. I suppose, again, if you're a type of prosperity, meritocracy type person, you'll say they absolutely deserve that because, of course, you do all your degrees, you work hard, 15-hour day kind of positions, then you should be well paid. But unfortunately, we know that there are significant swathes of people in this country that also work hard and don't get that. So, for example, the junior doctors who have started their second round of striking action, they're asking for a 35% pay increase from the government because many junior doctors are having to go to food banks to get free food so they can eat. And so it is, even though it's something that we look at and we kind of gasp, I think there are much deeper layers to this story. Now, of course, the government are going to respond. They always respond, and they say, look, we've been doing our best to make sure that people are living on a decent wage. I believe that the national minimum wage was increased to about £11.41 per hour, which is the equivalent to about 14,000 naira per hour, just so that people can work, pay their bills, and afford to go out with friends once a week. But yeah, pretty shocking. £3.8 million a year. It's nice work if you can get it. But of course, we know that if you are a boss of one of these firms, then you're under significant pressure. But yeah, a massive disparity, of course.
Right. I guess at some point, I'd like to be a FTSE chief going forward. I'm going to work really hard together. But we see a British clothing retailer.
You already work hard, Laddie.
I know. I need to, yeah, maybe work smarter. So we see British clothing retailer next. We've seen the stock climb by 4.8%. To a record high in early trade. And I'm sure this is having an impact on the markets generally there.
Yeah, absolutely. The UK Blue Chip Index is very much in the green at intraday. And Next is one of the top risers. In fact, Next have been doing exceptionally well over the past few years. We know that the British high street is embattled. It's changing so swiftly. It was changing before the pandemic. Then, of course, consumer habits changed when everything was locked down. Lots of people buy with convenience, so they're not going to high streets. They're going online. They're finding cheaper items. But Next is actually a bellwether. They're managing to override this storm, and sales are increasing. One of the reasons why their shares were up 4.6% today is because for the fifth time in less than a year, they've upgraded their profit forecast. Now, along with the upgrade, they also started giving in their trading updates for the festive period. I think in the 9 weeks to Christmas Eve, their sales were up 5.7% year on year, which is absolutely massive, especially if you consider just how competitive it is on the high street, particularly in the run-up to the festive period. And in fact, that 5.7 year-on-year increase for the 9 weeks to Christmas Eve was £38 million higher than what they had previously forecast. So yeah, things are going very well for them. On the other hand, you've got JD Sports, who a couple of months ago, I would have put them in exactly the same bracket with Next as being a bellwether on the high street. I don't know what it is about JD Sports, but people do love to be in a tracksuit. In fact, I'm probably going to a tracksuit as soon as I get out of the studio. They're very comfy. Lots of people use JD Sports, but alas, they haven't had a great festive period. So their shares are actually down 19% today, which is huge. Another contributing factor to the UK blue chip index being in the green is that we have had more PMI data today. Looking at the services sector, we know Britain is a service-based economy, contributes about 80% to GDP. And in December, the PMI figure shows that it's jumped to 53.4, which is huge. I think this is the highest PMI figure we've had for the services sector since June last year. And considering the reading in November was 40.9, which of course is below 50, the benchmark, I think the fact that it's jumped to 53.4 is more good news for Prime Minister Rishi Sunak, who seems to have had quite a bright start to the year. So let's have a closer look at the numbers. And the all share is up 0.12%. The FTSE 100, that's up by 0.01%. And the FTSE 250, the domestic market, Laddie, that's up by 0.11%. In the currencies market, the British pound is currently trading up against the US dollar too by 0.41%, also trading up against the euro by 0.06%, and up against the Japanese yen by 1.08%, Laddie.
Right, markets not looking badly there. Thank you so much for the update, Juliana.
Thank you.
All right, let's get a quick check now on Europe. We see fresh unemployment figures from Germany imply that labor shortage will continue to be a major issue for the German economy in 2024. For more on this, we have join us Wada Emran there. Great to have you, Wada. So tell us about the latest data coming out of Germany.
Thanks for having me, Laddie. Let's start with the raw numbers. The number of people out of jobs was up by 31,000 in December 2023. Altogether, this means that over 2.6 million people in Germany are unemployed. On a month-to-month basis, the number was up 0.1% from November. Now, if we zoom out and look at this on an annual level, the number of people out of jobs rose by 183,000 compared to December 2022. These numbers are very varying. And according to the head of Germany's Federal Employment Agency, there is desperate need for staff in skilled sectors like accounting or nursing jobs. And she noted a lack of employment growth in sectors like construction or retail. Now, one of the most striking features of this data is that 61% of the unemployed are on the hunt for unskilled jobs. It means temporary or part-time jobs or even full-time jobs that do not require degrees. However, such jobs are becoming more scarce each day.
And last year, Germany was looking to hire skilled labor and make changes to its visa process. How did that go?
Yes, the hunt for skilled workers continues. As I just mentioned, that many of the available human resources here do not possess the vocational training or hold degrees, and so have limited options. According to the chief of Germany's employment agency, up to 100% of the recorded increase in employment was due to skilled labor from abroad, meaning foreigners. And to encourage more skilled labor from all over the world, the German government put together attractive offers, promises to ease up the migration law and reducing bureaucracy. Like, for example, there used to be a requirement that only professional or recognizable degrees would count when you apply for a job here in Germany. Now they've dropped this as long as you can exhibit work experience or sufficient knowledge in your industry, and that you should have a job offer in a German company so that people can easily migrate. But some key concerns like language requirements still remain.
All right, now tell us what investors in Europe are looking at.
Well, Europe's benchmark index, the European Stocks 60, dropped 0.9%, hitting a new low since mid-December. Important indexes in Germany, France slid 1% as well. Shares of luxury bigwigs like LVMH, Hermes lost over 2% as well. One big news that everyone's following is the saga of Netherlands and its chipmaker ASML. Now, Netherlands was on the US's side in the chip-making battle, and they halted some shipments heading to China. Shares of ASML also dropped 2.9%. Otherwise, Danish shipping giant Maersk gained 5.1% after investment banking firm Goldman Sachs upgraded its stock rating to neutral. Maersk had also announced yesterday that it was suspending shipping through the Red Sea until further notice.
All right, thank you for the update coming from Europe there. That was Wada Emran right there from DW. So let's get a quick check on some stories in Africa now. We're seeing the news. Kenya and the U.S. are set to resume trade talks in February of 2024. We see Kenya's Trade Cabinet Secretary confirmed the Strategic Trade and Investment Partnership, a round of talks that will focus on the completion of a text on agriculture, as well as the new clauses that include services, domestic regulation, MSME, and anti-corruption. Text aims to enhance cooperation among MSME support centers, promote the participation of MSMEs in digital trade, and help them to adapt to the market conditions. The U.S. has tabled the proposed text on anti-corruption, 9 articles, and covering a wide range of topics. All right, now let's get a check on the crypto market now. We'll see some headlines there. 181,697 crypto traders were liquidated in this market. Talking about traders looking to go long on Bitcoin. That's imagine that Bitcoin's price will continue going up, but with that big drop we saw in the market there, 181,000 traders that expected Bitcoin will keep rising were liquidated. That means they lost money. Definitely painful. See them, 181,000, big drop there. Also another headline we see right there, U.S. government is holding over $8.3 billion in Bitcoin. Would have been higher if they held on to some other Bitcoins that were offloaded in the past there. So the third one now, we see that Michael Saylor, that's Michael Saylor, the CEO of MicroStrategy, is selling about $216 million worth of MicroStrategy stocks. They're offloading most of that. Some are saying it shouldn't have an impact on Bitcoin, but we're seeing a big drop at this point. Let's bring in Michael Inaji now, financial market analyst. Great to have you, Michael. Happy New Year.
Happy New Year, Laddie. Thanks for having me on.
Fantastic. So everyone's still talking about the Bitcoin spot ETF at this time. There were indications that there's going to be an approval. In fact, some believe there's already an approval on the table. What are you seeing?
Yeah, so the SEC yesterday met with the 3 largest exchanges in the U.S. They met with the CBOE, they met with the New York Stock Exchange to basically go over comments issued by ETF issuers about their 19B4 comments. So this is a good signal in regards to everything we've seen this week. Yesterday we saw Fidelity also file as well, which basically indicates their application's good to go. The deadline for filing, for having the ETF approved, is from the 8th to the 10th. So most likely we could start seeing the approval as early as today, but most likely it's going to come in either sometime from now until next Wednesday. You're going to see that approval. If it does come, it's going to come in. People are saying, is it going to come in one go? Are they going to just greenlight all the applications? Or are they going to go basically one by one? And the oldest one that could be ready would be the GBTC application, which is basically the reason why that has to go through is because the court has forced the SEC's hand with a lawsuit where they state that the SEC's action is capricious, which basically all that means is, you know, it's it's not fair to GPTC, because the courts and the judges found that there's a 95% basically shadowing of GPTC futures, and there's a 95% correlation between the futures and which is a product that's issued already, which is an ETF, and the regular Bitcoin spot market. And everyone already knows this. Anything that's a derivative has an underlying asset that it mirrors, which is one-to-one in some of these instances, because it's just a long directional futures product.
Okay.
So the court found that was unfair, and so now the SEC now has to act. So that's why you're going to see these applications come through. And in terms of fairness, people have been waiting for years.
Okay.
So now it's the SEC's job to make sure this gets done fairly, which is going to be soon.
All right, Michael, we see the price of Bitcoin there is down about 5%. A big drop there for $3,055. So we did see Michael Saylor selling some MicroStrategy stocks very quickly now. Is that what's bringing the price down?
No, what's bringing the price down is there was a fake headline about the ETF getting basically denied, and because of the overbought indications we're having, any kind of news, there's just so much fever that it's going to take the market down. The market's going to look for an excuse to go there, but technically you could already see the setup. And in regards to Michael Saylor selling his stock, it's not really a negative, because he's actually using that the proceeds of that sale to buy Bitcoin.
Okay.
So it's actually even more bullish. It's actually quite a genius move on his part.
Quite bullish. All right, thank you so much, Michael and Nigel. Always great having your perspective. Thank you.
Thank you.
All right, so there we have it. We see it's a really, really red market with big drops there. XRP is down about 9.22%, Cardano down 8%. And we see some big double-digit losses in the market. So it's a massive pullback right here in the first trading week of 2024 in the crypto market. So that's the show today. Visit www.channelcv.com for more updates. I'm Ladi Williams from me and the team right here at Lagos HQ. It's bye for now.